It is an absolute pleasure to have Christian Easterday, CEO of Hot Chili. Christian, welcome to PDAC.
Yeah, good to see you, Thomas.
Great to see you. We are here at Grizzle HQ, the fire, the sauna. This is the other side of PDAC. Yeah. Christian, great to have you here. Talk to us about the copper market right now. Just big picture. You know, you're living it, you're seeing it. You got one of those exciting growth projects in copper in the world. I think a lot of people understand the thematic of where copper is going, but truly don't understand, like, you know, how hard it is to get this out of the ground and how important it is for the future.
Yeah, correct. No, look, it's a really exciting time in the copper space, as you know. Things have been a bit tough in the equity markets, and not a lot of commodities are keeping their head above water, and copper has been one of the few that's been really resilient, Thomas, as you would have been watching over the last year. And we're in this really, really interesting space now where we're seeing a lot of tightening in the market, a huge amount of production that dropped out at the end of last year and early this year, and a real reduction on the treatment and refining charges. All of those early signals that are perhaps suggesting that this copper deficit that's coming, this supply deficit, is coming sooner.
Yeah.
And it's probably going to be a lot more aggressive than people had thought.
So one of the question marks around, you know, Dr. Copper.
Yeah.
Right, Dr. Copper. We haven't really seen Dr. Copper soften.
Not yet.
Right, and the question around that is, like, rates have gone up. You would think that copper typically goes down. Is that indicative of how tight we are right now? Is like, just from a inference perspective?
Yeah, and you can always tie, as you say, Dr. Copper and its barometer for, you know, global growth and the health of the economy, but, you know, that relationship of industrial output and everyone keeping their eye on key indexes, you know, has really started to decouple over the last few years. And that's associated with this new usage of copper going into electrification, from everything from renewables to EVs and all of the new grid infrastructure build out that's going on. You know, what was really interesting is we saw a pretty depressed condition across most metal markets last year. And under that environment where China was meant to be pulling back and we see all of these sort of headwinds in the market, that we had record imports of copper into China last year. Yeah. And, you know, that's telling you a lot of things, that the domestic market is very, very healthy. Yeah. That demand weakness from the real estate sector in China was something that was really focused on, but it was more than accounted for by the new demand coming on. And so that's boding really well for this short to medium term thematic in copper, and probably where we're likely to see copper prices driving in the second half of this year. Yeah,
it feels like just the tailwind is so strong here that you just that little pop, and maybe just to get to marginal pricing, right? Like, we are clearly in a world where copper is important for the future, and maybe you can talk about supply demand and, you know, the shortage thereof over the next several years. But just what price of copper would it take to bring on new supply?
Yeah, it's an interesting thing. I was just listening to some things videoed from some really smart people at BMO. Colin Hamilton's interview just recently in the last few days on what he sees in the copper market, and he had a number of points which were a really good summary of everything that's going on. But, you know, I think ultimately, you know, it's the supply side that we in the mining industry are focused on. Yeah. That inelasticity, we fail to see how you can bring on some 8 to 10 to 12 million tonnes of additional annual production in the copper space, where we have a lineup of development pipeline projects that are large, and you can hardly come to 3 or 4 million tonnes in total. That's if all of those projects come online in the coming 6 to 8 years. So, you know, that inelasticity is probably what most people are seeing as a real driver for copper price in the short term. And so it's this continued growth, this underlying growth a supply drop-off. We're seeing declining grades. We're seeing these this higher inflationary environment putting a lot of upward pressure on costs.
Yeah.
And so what you're actually seeing is that incentive price has been rising. People talk about $4 per pound copper, but the numbers that Hot Chili has done on most of the peer group around us are suggesting $5 per pound copper prices and north to just start the incentivization process. So there are a number of things that are holding back this capital deployment into the copper sector to start pushing these projects forward and start preparing this new supply. But at the moment, we just haven't seen it.
Yeah.
And so you see CEOs like Gary Nagel at Glencore, continuing to beat this same thing that we will bring supply on when the world's screaming for it. And so at the moment, it's hard to see the incentivization for the copper executives to be throwing billions of dollars of investment decisions into the space. And while that's still occurring, what's actually happening is that formula to create very high copper prices in the near term is actually just getting ratcheted up with each year that goes on.
It's an incredible backdrop that in terms of, you feel like there's this coming situation to be reckoned with, in the sense that we have this view that there's this electrification future that is bound to happen, but you have this important commodity, right? It just feels so. What we're clearly in this mismatch, right? And 4 or 5, and maybe you could talk about what are the challenges right now? Like this is surely everyone's thinking about bringing pounds to the market. Why have we seen so many mess ups? And I'm using light language here, but this is I saw a Codelco chart of production. I'm like, this is kind of wild that the largest producer, this is the equivalent of Saudi Arabia
dropping out of the oil game.
Exactly.
Correctly.
And not doing it out of their own consciousness, right?
That's right.
This is so much bigger than oil.
Yeah, and you would have probably seen the recent articles coming out on Codelco's major investments in their 3 pillars of growth in Chile, as they're trying to refurbish these very, very old mines to establish them for declining grades and often underground production starting to ramp up. But we have a big chunk of the world's production coming from Chile, I think it's around 27-28% at the moment, and almost 12% of supply coming from just Codelco on its own. But as we see that decline, these are the main areas where copper has come from, in large, low-grade deposits that account for some 70 to 80% of supply. So to bring on meaningful big projects, and when we're in the copper sector, we talk about meaningful projects generally as 200,000 tonne per annum copper production profiles.
Yeah.
But the reality is this next cycle, we don't have any of those left.
Yeah.
We have a couple of them in the pipeline of the majors, but outside of the majors, where 12 of the top 50 projects are controlled, we virtually do not have a 200,000 tonner. So the largest project in the pipeline at the moment is 150,000 tonnes per annum of copper production profile. Hot Chili, we're sitting on a 100,000 tonne per annum project. And when we look at the projects above 100,000, Hot Chili is one of 6 names that holds a project of that scale. And the projects of that scale are not going to solve this. We need another 60 of those projects if we're going to solve it. So there lies the issue.
Well, which highlights the value and importance of what Hot Chili has, and maybe you could talk about you've got a sizable asset, one of 6, right? To talk about the project and the opportunity for Hot Chili.
Yeah, I mean we've obviously had a great head start. We're 15 years into this journey. Projects of this scale take between 17 to 21 years to bring into production.
Incredible. So 15 years into the journey, man.
We've lived every year of it, Thomas. We've lived every year.
So I have a lot of great bands that I follow that cannot even stay together for 10 years. 15 years. I respect that. I respect 15-year journeys.
Which makes the management of Hot Chili and the people that I've been very lucky to work with. You know, we have a fantastic culture, and I guess, you know, we had a saying from the beginning, and it was like when the Spanish turned up in the New World, there was no going home. We burnt the boats on the shore.
Yeah.
And so this for us was about, you know, taking this journey to build a large-scale copper project. You know, these things are extremely lucrative when they get into production. They're long-life assets. They're very, you know, often projects that carry big capital numbers at the front end. But it's the time that it takes to advance through, and a lot of that is permitting.
Yeah.
And so, you know, we may not be the highest grade deposit, but we're a project that will put out about 100,000 tonnes of copper, 50,000 ounces of gold a year.
Yeah.
And will do that probably for multiple decades. And when you move into a future where copper price looks like it has all of the ingredients to probably stay at a sustainable higher price environment for quite some time, certainly north of $4 per pound, but I think when you try to be conservative about these things and people get nervous saying $5 a pound, you know, it's like being nervous at the front of iron ore when iron ore was $18 a tonne.
Yeah.
And people daring to say $30 a tonne,
right,
or even $40 a tonne, because it might make my project look very leveraged. But the reality is, in commodities that are very, very inelastic, because you've got long time frames, you've got heavy capital that needs to come in. So when there's a demand push and there's a muted supply response, what you get is often at the beginning very explosive copper price, or commodity price rather. And if we see in copper what we saw in iron ore or what we saw in lithium, I mean, what would people think if they were talking about $40 per pound copper? Because that is what is
right.
It's not a precedent that's been set.
No, that really is a great point. We really haven't thought constructively about you have to change your frame of reference, right? Like you have to, like if you really want all of these future, the way the world is growing, that's going to require a totally different incentive price. You're going to need multiples of your project, but and you're one of 6 projects, and so a very exciting setup now, just with respect to key catalysts for you guys going forward. Talk to us about the opportunity, because you just updated your resource, and congrats, and so that is clearly showing that there's significant value that continues to grow. Talk to us about how this continues to play out.
Yeah, look, the resource is now at a very large scale. We've ticked over 1 billion tonnes combined. Got a bump in our indicated. We're now 85% measured and indicated. You know, there's some $220 million that's been invested into this project, which is a significant amount of investment over a long time. And so we're now sitting here with this project, about to deliver on the pre-feasibility towards the end of this year, which sets us up for the final 2-year phase, which is about getting our final approval once we submit our environmental impact assessment, and then really moving ourselves and preparing ourselves for a financing investment decision. And that's the point where a junior attempts this unicorn challenge to transform into a project developer and producer, and a producer at that scale, putting out revenues at the moment projected at around 850 million US annual revenues. So it'll be transformational, the journey that we're about to undertake the final phase on. So we're seeing a huge amount of interest in the various offerings in our project, from the precious metals that we have embedded in our concentrates to the offtake that is uncommitted at the moment, but more importantly, also some embedded optionality, which you and I started speaking about. The last time I think we sat down, and alongside that resource that we put out a really interesting short news piece on a concept study we've been doing on our water assets in Chile.
And that's kind of something that just water and the importance of water, like, you know, truly I didn't appreciate to the level until, you know, we met, I think it was at Beaver Creek, and it was like, that's first when you put it on a radar, and then it just, you know, we're 7-8 months in, and it's just like, wait a minute, this is like water as an asset. It's an incredible, that's just an incredible auxiliary piece that continues to grow the story.
Yeah, and it's one of those things that, you know, in the last 4 or 5 days, and I've had, you know, maybe 40 odd meetings in the last few days, from the Bank of Montreal conference down in Miami, and now turning up here early into Toronto for PDAC. And I think, you know, what we've just put out in the water has really gained a lot of attention quite quickly, because if you don't have water, you don't have a mining project.
Yeah, that's right.
And the wild thing to think is that Hot Chili, over 12 years ago, decided that water was going to be a huge risk in the Atacama. We could see it then, that taking water out of the ground was not going to be something that was sustainable for Chile or for Argentina, anywhere in the Atacama where we have water scarcity. Fast forward, and we're sitting here after 10 years to secure a license to extract water from the ocean. All of the land accesses and the permits that you require to provide water to Hot Chili, salt water.
Yeah.
And that's great. It makes a really cheap project for us on our copper project. But then for us to realise, when we had third parties coming to us saying, you guys have actually got a water licence in this area, and nobody else does.
Yeah.
And so then we undertook this study over the last 6 months, and what we've identified is that we're not just in this really advantaged location on the coast for our copper project, but we hold the keys to unlock 6 major copper developments right next to us. In fact, I think in that one area of the world, that's almost a quarter of new supply for copper in the next 10 years in one area. And there's not one active maritime concession to provide water into that area.
Incredible.
Or not one active application for a maritime concession. And in anyone's eyes, that's a 10-year head start. That's the ability to upscale that license, transfer it, and prepare it to provide desalinated water for all of these mines in one network with one desalination plant and one pipeline. Not seeing 5 pipelines, 5 desalination plants, and all of this larger environmental and cultural footprint. So the government has been sitting there and really, really encouraging us and encouraging all international investment to look at water opportunity in Chile. This thing that's holding back all of the new copper supply in a big chunk of the world's new copper supply area. And what that's meant is that now we're moving into this exciting phase where we're engaging with the potential off-takers, where we're engaging with major infrastructure businesses, and we've got this asset, you know, that gives us a free ride for monetization options. Wouldn't it be crazy if water was able to actually pay for most of the capital required to build Costa Fuego? And that's what really mind boggles. And the numbers are quite startling, Thomas. And people sort of have been asking me in the last 5 days, but what does it all mean? I'm trying to get a feeling for what the size of this opportunity is, or how would you monetize it? And you know, without detracting from our core business, which is developing Costa Fuego into the next large-scale copper producer for the world, you know, it's looking at that and saying 3,700 litres a second is a long-term off-take environment that we've identified around our project. We would probably start the project at around 300 litres a second. We don't just provide all the licenses and the easements, etc., but we're also a foundation customer for that.
Yeah.
So we bring ourselves as a customer to this water business, and our partners CMP Cap in Chile and the local communities that will benefit mean that the project can probably get off the ground quite easily, but it's very attractive for major infrastructure businesses because 3,700 litres a second at price point of 1 cent US a litre in the high Andes, which is what our work has determined around price discovery, and 1 cent US a litre on 3,700 litres a second. Now you've got to do a couple of things on the calculator, but it takes you about 20 seconds to determine that that drives about 1.2 billion US of revenue a year on a 50-year license.
It's
And
incredible.
my copper project produces 850 million US of revenue. So,
Oh man,
so we're learning,
water company.
we're learning a lot of things at the moment, and
hot chili water.
we really like what we're looking at.
We need the hot chili H2O, right? A water, a blue version
That's
of the
right.
chili, right?
Well, hopefully we're not getting into hot water. But hot chili water, definitely.
No, man.
Yeah.
Christian, and always illuminating, always great to hear about the understanding of the copper market and what you guys are building in Chile. Thank you so much, man. Thank you. That was Christian Easterday. A pleasure to have him here at Grizzle HQ. We're doing PDAC 2024.